Start recording. Hey, good morning, everybody. It is Mike, and I am one of your co-hosts of Multifamily Unplugged. Welcome. It's Saturday morning, and we are here. I am joined this morning by my co-host, Moose. What's up?
How you doing, Mike? Good to see you.
Yeah, it's good to be seen as usual. That's for sure. Hey, so what's new? Anything, Carl?
Oh, no, man. It's just a beautiful day here in Chicago. I'm on Lakeshore Drive, and it's sunny. People are playing golf, running, walking their dogs. It's gorgeous.
Yeah, I will tell you what, it is a beautiful morning this morning out here. I've been outside. I am on this running bike trail that goes, I think it goes from like Holman or not Holman, but Humboldt Park all the way into the city. And it's like, I can't even tell you where I'm at. I'm like in Bloomingdale or what would be Ravenswood up on the north side, but anyhow, we were out here taking pictures this morning. We're just having a good time. So I'm kind of lost, not sure where I'm at, but I was out with Carol this morning. She was taking pictures, and we walked around, walked back and forth, got good 10,000 steps in this morning, Carl. So
nice. Is that the train track that they converted into a trail?
That's exactly what it is. That's exactly what it is. So
that's pretty cool.
So we came out, got some content. Well, let me kick this thing off. Hey, welcome everybody. It is Saturday morning, Multifamily Unplugged. My name is Mike, and I am with My Core Intentions, and we are one of the co-hosts along with Moose, your focus guy, and we are the co-hosts of Saturday morning Multifamily Unplugged. So what I want to tell you is if you have somebody around, go wake them up right now, stick a cup of coffee in their hand and get them here, because they are not going to want to miss this morning. We have a guest on this morning that I am super excited about, Shannon Robenett. And I know I just butchered that, and I'm going to let him straighten me out here in a minute. But we're going to talk about blockchain. Carl, I am so super excited about this blockchain. And my conversation with Shannon around this was that, listen, I've made some predictions in the past, and I don't necessarily know that I want to make this prediction, but I think that blockchain could probably put title companies out of business. And wait till we get into this and you see how this works and what it'll do. So anyhow, let me do some housekeeping. Hey, I'm Mike, My Core Intentions. We are here live on Zoom this morning and trying to go live on Facebook, but we'll have to post this later because for whatever reason, Facebook is not letting us do that. So we'll get it out there later. But listen, here's what I ask every week. If you like us, you like this content, go follow us live on wherever you get your social media fix, whether that is Twitter, LinkedIn, Instagram, Facebook, but you will find Carl and myself and My Core Intentions, as well as your focus guy, all over social media. So wherever we can help you get your real estate fix or your mindset fix, make sure that you're following us, that you're liking us, loving us, subscribing on YouTube. Listen, it does nothing but help the ratings, right? So just if you could help us as we continue to bring great content to you like we have for the last year and a half, we will continue to do that. So thanks for being here. Appreciate everybody. Let me be quiet here for a minute and ask our guests to introduce themselves. Hey, Shannon, are you there?
Good morning, Mike. How are you?
Great. And so glad that you are here with us this morning. Thanks for joining us. And Shannon, what I'd like to do is just have you jump right in and tell our listeners and guests, who you are, where you're calling from, and your background and what you're all about.
Well, Mike, I met you through social media. I met you online, and I was one of the guys that was following what you were doing, and I saw the synergy there. But, I'm a second generation builder developer. I'm a fourth generation realtor. I've been in the real estate development space my whole life, and I've gotten recently into syndication in the last 18 months with a couple of deals that we've done. And in the course of the last 18 months, I think we've raised about $35 million for different deals. But what I found, Mike, was like breaking into development, getting into syndication and raising capital was difficult. Being in the right place, trying to find all the social media levers to pull, trying to find the places to go, trying to see what's going on And I also had a background where I had a love for cryptocurrency, and I loved what was going on in the blockchain space. And I really, over the last year and a half, have figured out how to blend those two and to make that a married platform where we can show people how to not only raise money as syndicators, but also as investors to see opportunities that are in front of them, and then to be able to tokenize that and allow the liquidity event that's never been really a great process in syndication. And so we just kind of brought all that together. And that's just kind of, after 27 years of building stuff and doing stuff, I'm still building businesses. I'm just kind of launching into the digital security space. And it's super, super exciting. It's really like nothing we've ever known before, because it is a complete disruption of the world we've been trained to learn.
Yeah. And, Shannon, when I talked to you about this before we had talked about you being on our podcast here this morning, what really intrigued me was this whole digital currency thing, right? And how blockchain can really play a very important role in the real estate industry and all of the ancillary products like title and everything else. And Shannon, what I'd like you to do right now is explain for our listeners who don't understand, fully grasp what blockchain is, and explain that process, how that works, where it got developed, the whole. If you would just take a couple minutes and do
Sure.
that, that'd be great.
Yeah. So Mike, when most people hear blockchain or cryptocurrency, they really believe that it is a money. And while it can be, the green stuff that's in your pocket that has pictures of Benjamin Franklin and Andrew Jackson and those kinds of things, those aren't really money either. I mean, they're a representation, but even those say that they're a promissory note, right? And so everybody looks at it and they go, well, Bitcoin is a cryptocurrency. And while it is, it's more of a distributed ledger, so that everybody that owns Bitcoin can see where all the other Bitcoin are, can see what the transactions have been, and can actually be a part of seeing what is happening. And in that transfer of information becomes a value. Think of it like this. Up until a couple of years ago, Microsoft made no physical product. Microsoft had a stock that was worth hundreds of millions of dollars, even billions of dollars, and yet they created no physical product because their whole intention was to create intellectual property. Well, Bitcoin is kind of the same thing, and Bitcoin is the granddaddy of it all. But then you've got Ethereum, you've got Solaro, you've got Polkadot, you've got all these other coins in there. There's over 1,200 coins right now that are being out there. Everybody knows about Doge and all this kind of stuff, but those are Ethereum, Solaro. Those are coins that actually have a function. They do something other than just record the information. And the way that happens is in the hashing. There's the Genesis token, which is the very first one. And then when that one splits, another one is mined. All of the information on the Genesis token goes onto the second token and the third token on half of that. And the record of that transaction is continued. Let me break it down for the real estate people and take it to a title company. Okay. If you go to a title company, Mike, you and I could be in the title business by, let's say, Friday next week, because we're going to go to the county courthouse and we're going to get all the records for that particular county or parish or whatever they call it where you're at. And we're going to get all those records and we're going to put them in a database. And then we're probably going to submit that database to Fidelity, because Fidelity writes about 85% of the paper in the title insurance business. They write up most of the paper. We're going to present that to them. They're going to certify that, yes, our records are correct. And then you and I can open title company. We go about marketing it and we create that title record. So when people call us up and they say, hey, I want to buy 123 Jump Street, they go look at it and they pull the title report and they go back as far as they can find it to where that was the original piece of property in that parish. And they certify that there are no liens and encumbrances and there's no easements on it, and they provide all this information for you. And then when you sell that in 2 years or you refinance that in 2 years, you're buying title insurance again. So you're consistently doing things that are being redone, that you're repaying for. I'm in the process right now on about a $30 million construction loan. I'm getting title insurance, and that title bill is pretty hefty on something that I've already paid title insurance on when I bought the land for cash. And so this is a thing that gets continued to be done. If you take that and you look at it in the blockchain technology, not necessarily the cryptocurrency side of things, but in the blockchain technology, which is the underlying technology, and I create that Genesis block where it was a section. And then I divide that down into the quarter section. I divide that down in the subdivision. Then I divide that down in the lot. And now I divide that down and I transfer that title to you through blockchain technology. And I've distributed that ledger amongst the world. And in blockchain technology, as you know, Mike, there are nodes. So all of this is done on distributed computers everywhere. So that information isn't just contained with me. So now I've provided you with a secured transaction that's backed up to the title. It's put on chain, as we call it in the industry. And now that chain is locked and it's distributed to everybody out there. And when I mean everybody, if you've got the right software, you can see that even if you're not part of the syndication, even if you're not part of the ownership group. So with that, we're able to make it completely transparent what happened with the title, who the lenders are, who the borrowers are, who the actual owners are. All of those shareholders, all of the stakeholders in the project are all on chain and they're all visible to be seen. It doesn't mean that we know what price they paid, but we know who the ownership is. And Mike, when you roll that back one more step into the world that you and I work in syndication, well, the only thing that's happened to syndication since the Jobs Act is we've now introduced DocuSign, right? But how do we know that the document that we gave out to all of our syndication partners is the true and correct and accurate one? How do we know how many shares that Bobby has and that Susan has and that Sammy wanted to buy? Then the other issue that we have as syndicators is once we syndicate that, we don't really want our people to have liquidity because that creates a paperwork nightmare for us. But if we can create that liquidity through the digital security side of things, where that becomes a tradable asset with the digital security that is actually happening on a platform that doesn't have anything to do with the syndicator, and that is on a distributed ledger. So everybody knows that Bobby sold Susan 1,000 shares of his property. All of this stuff starts to happen and be transacted and being taken care of on the cap table has nothing to do with a syndicator that allows freedom for everybody else that's going on. So the reality is at the end of the day, you've got the ability to make this a reality for liquidity to happen on so many different levels that we can really go so many different directions on that. But that's really at its core, that's what tokenization of real estate does for you.
So how does that, so right now when we go to title to get pull title, we have to go to a title company, correct? Which is a licensed, certified. Yeah. So what you're saying is that if you have the software, you can do this yourself. You don't have to pay for that?
No, that's not what I'm saying. What I'm saying is that the technology is the same as title. Okay, so title is, and see, when you go to a title company, they're not giving you the title. They're actually, let's call it your cap table manager. They're taking the documents, they're putting the documents in front of you. Moose, you sign them. They take them over to Michael. Michael signs them, and then they take them to the city or the county courthouse, and they record them at the county. So the title company doesn't keep the record. They just distribute the ledger of the record that is kept at the county courthouse. You follow me there?
Yeah, no, I've been in real estate. Yeah, no, I get that. So right. Yeah. The title company will go and they'll record it, and then it's public record. Right.
So then what you're doing in this regard is you're taking that title and you're putting it on chain and you're locking that title and you're distributing it to everyone. Now with our platform, what we do is we create a smart contract, which basically has all of your SEC documents for your syndication, all of your lending documents, all of your partnership agreements, everything that goes into there. And that is part of what gets locked on the chain. So now your agreements between you and everybody else that's in your LP, those are all locked and those are all distributed so that everybody can, with the right software and a part of the process, can see that going on and can actually see those documents. So you're not having to worry about what happened to your documents 3 moves ago, or what box those are stored in, or where you're going to be able to go find those. You're able to have those with you all the time. Then when you go to transfer that title or those tokens, I mean, think about this: when you buy a stock on Robinhood, or when you buy a stock at in Scott's Trade or whatever, you're not actually physically getting that piece of stock paper. You're not getting the stock certificate like we used to do 100 years ago. What you're getting is a digital record of that. Okay, they're not calling it tokenization, but what happens if the stock market recording system crashes? You're toast. Your records are gone. Your ownership is gone. On a distributed ledger or blockchain technology, digital security technology, that's distributed amongst hundreds and thousands of computers, so that never gets wiped out. So the reality is you've converted it from a physical to a digital through that process of tokenization.
Wow, this is, I could see where this would for title. So what are the title companies doing? They've got to be on top of this, because those are big companies. Are they prepared for this? Or are they are they implementing and adopting blockchain, or what's going on with that?
To give you a perspective, only 16% of Americans actually own any cryptocurrency or any digital assets. Okay, that includes NFTs, that includes everything that's out there. So we are early adopters in this space, and I don't think title companies are paying attention to it right now, because number one, they look at things like Wall Street looks at things. We're so big, this will never change, right?
Are you serious? Are you really? That blows me away. I mean, this makes so much sense to me. I mean, it makes so much sense to me. And I don't know anything about it. I have friends that are in crypto, and blockchain was around before crypto, wasn't it? Wasn't blockchain?
Well, blockchain is all blockchain is, all crypto is monetized blockchain, right? Like Intel or like Microsoft is monetized in intelligence, right?
Yeah.
That is, I mean, what they sold was they sold Microsoft Word, and they sold, Microsoft Excel. That's what they sold. And then they got into other products and other things. I mean, think about Facebook. Okay, Facebook is a monetized brand, but they physically own nothing, right?
Right. Yeah.
But their stock is worth millions.
Yeah,
billions,
they're selling electrons. I totally get that.
Exactly.
But I can't.
That's what blockchain does.
I can't believe the title companies aren't paying attention to this.
Well, I'm not saying that they may not be paying attention to this, but the reality is this is brand new in the space, because so the the St. Regis Hotel in Aspen, Colorado was tokenized as one of the first major syndicated tokenized assets in the United States, and that was just recently done. Okay, so this is very, very new to the space of how do you find other uses for the blockchain technology. But if you think of title, it is exactly that. It is a paper record of the transaction of the transaction of the transaction of the previous transaction.
So let me ask you this.
Doing with blockchain.
So let me ask you this: are the counties going to have to adopt this, or how do the because in one of the other businesses I do, we deal across the country helping people get money that they're owed to if they lose their house to taxes or to mortgages. Right. And we deal with counties, and every county has some are more sophisticated than others. So I'm just curious about, how this is going to, because when you close a piece of property, depending on where it is.
Yeah, so there are a couple of counties in the Northeast that are actually working to digitize and put their whole title process on blockchain right now. Right. So the reality is that is happening, and people are seeing the use for that. There's a whole nother world that happens with it. And this is going to be where, think of it this way. If you open a Coinbase account, you still have to fund it with an ACH or a wire, right? So you have the new technology still slamming into the old technology until we find a way to get money out of banks, to get the old processes we've used for hundreds of years to change. You're still going to see where old technology slams into new, right? So just like
Shannon,
you're funding your account. Yeah.
Hey, let me just jump in real quick. I want to ask if you would go back. I've got somebody in the chat that's asking, can you explain blockchain again? Can you break it down a little bit more in a, maybe in a really, really basic model for us to understand a little bit more?
Sure.
And just the best you can, and don't take a lot of time on it. Just a minute or so, right? And then go back to what you were answering.
So blockchain technology is exactly that. It's a chain of receipts. Okay. So if you think of this, if you go back, let's just take the United States as a whole. The United States as a whole used to belong to other people, i.e., the American Indians, and those American Indians had no title. We took that and we said, okay, we're taking this piece of property and we're calling it Wyoming, right? And we're going to create this state, and then out of the state, we're going to create our counties and our parishes and our different things, and then we're going to create our cities, and all of those things were a breaking down of information that was then recorded. That is exactly what blockchain does. So blockchain starts with one. Bitcoin started with number one, and that was called the Genesis block. Out of that block, it split in half. Each of those blocks split in half. Each of those blocks split in half. And every time that the block split, every time that there was another link in the chain, that chain contained all of the information from the first block in half of it, and all of the new owner's information in the second half of it, much like a title deed would have the seller on one side and the buyer on the other. So you could go back through that. Blockchain is the same thing, and that information is distilled through nodes, which are basically thousands of computers worldwide that do the calculation, and that calculation is called hashing. And there's date, time information that goes into each block of information, and there's also ownership information that goes in there. So that's what creates blockchain technology. Now we're overlaying real estate information into those blocks and creating that. So when I start an apartment syndication, I have the Genesis token. Out of that Genesis token, there's my PPM, there's my offering memorandum, there's my original title insurance, there's my appraisal, my lending, all of those kinds of things go into that Genesis token. From there, all of my LPs are brought in and they're put on chain, and that asset is recording who bought how many shares, and that's tokenized. And then they are given those digital securities, much like you would in your syndication documents, where you would say, Susan bought in, she got $100,000 worth. We raised $4 million. So by percentage, she has this much percentage. We do that same thing. So we're creating that digital token that creates that security that is written on the chain of technology called blockchain.
So let's unpack some of this. So, one question that I have is, who starts it? Where does it start? Can I, as the seller, or can I, as the buyer of an apartment building or a single family house or a factory that I'm going to buy, put my title on blockchain? Or do I have to be the seller to do that? Or does the title company? Where does it
So the reality is,
who starts?
Yeah, so the reality is you as the buyer. So now what you're going to do is you're going to take it off of, so think of it this way. When you get done with your actual title transaction, because that's what's recognized today. So you take your title transaction, and My Core Intentions buys this asset. They put it into that Genesis block. You've got your PPM, you've got your OM, you've got all of your partnership agreements, you've got your note. All of that goes into the smart contract. That is really not a smart contract. It's just a set of triggers that do certain things at certain times. And out of that, we're going to say you sell 1 million tokens or $1 million worth of equity that you bring in the LPs, and you create 1 million tokens. With that, they are now in electronic ownership of that document that you would have normally circulated to them in DocuSign and given them a paper copy or an electronic copy that way. But this actually locks them in on the title, and they're actually recorded in that smart contract, and all of that is all digitized. Now what that allows them to do is it allows them to physically move that and have those tokens, and per the SEC and per everything else, they're allowed to then take care of those and either sell or convey those to everyone else in a way that makes sense to them.
So what is the cost? So, and here's how I want to look at this. What's the cost to get it established? And then when I go and trade my property, what is the cost the next stage? Is there a cost anymore?
Yes. So if you're familiar with blockchain, if you're familiar with cryptocurrencies, there's a thing called gas, and that's a transfer fee. Every time you swipe your Visa card, there's a cost in that Visa transaction. We have a similar cost of doing business. We work with syndicators to create the platform that says, hey, Mike, you've got a deal coming up. You're trying to raise $5 million. We have a marketing budget that is based on raising money for 25 or 50 syndications. You have a marketing budget for your one. So if you join the platform, then you're able to put your deal on the platform. It's a lot like CrowdStreet or anything like that, where you've got your deal tile. You're able to display your deal. We take care of all the KYC and the AML that happens with that. So when people join the platform, they're able to see the deals that they're approved for. So if you're an accredited investor, great, you're seeing accredited in deals. That way, you're able to see that value. So when you, Mike, when you start a syndication, there's usually about $50,000 to $75,000 worth of fees that you pay to attorneys, to underwriting, all of those kinds of things. We take that and we break that down, because instead of having upfront fees, we're looking at more of a monthly model. So we're trying to take this down a notch and allow more people to participate and lower that barrier of entry. So we're able to provide you with a packet at about $1,200 or $12,000 that allows you to bring me your syndication. We provide you with a copy of legal documents should you choose to use them. We provide you with all the marketing material. We create all of the tile. We put everything out there. We send that out to our network. We send it out to your network. And investors come in on the retail side looking at this deal and decide if they want to participate in it, much like anywhere else. And if you want to see this in real life, you can go to myverticalequity.com. We have 4 deals on there currently, and you can see how the investors are able to see that. Now, the reality is we are looking at a fee-based cost, and what we look at is in that we're looking to charge a cost per million per month. So a cost per million raised on the equity side. We're also working on a debt side as well. But the reality is right now you can go there and that model is designed to provide the equity so that instead of spending all of this time and effort, Mike, that you do so religiously and dedicated to get your message out, we're doing that on a much broader scale with a much larger budget to move My Vertical Equity into a space where people go to My Vertical Equity and they go, oh my gosh, Moose has got a deal on here, and Mike's got a deal on here, and Shannon's got a deal on here, and there's a deal in Texas, and here's a deal in California, and you're able to see all of those things. So that's really the model that we're looking at. And the overall goal is that we are looking at the ability that long-term, there's not the need, because most syndicators, they get into the value add deal, they buy the deal, they fix the deal, they refinance the deal, and then in 5 years, they sell the deal. 5 to 7 years, they sell the deal. That's kind of the model.
Right.
And the reason that they sell the deal is because it's got to where it's worth enough money, they can harvest that. But the reality is all they're doing is selling that deal to go buy another deal. What if there was the opportunity to make that infinite and to sell additional tokens to an additional group of investors, pull more cash out and continue that process and continue that process and continue that process so that you never had to sell your syndicated deals.
So
That's
Shannon,
really
how does the title company and the attorney come to the party here? Right? Because
Well,
I think that a couple of the big stumbling blocks are, first of all, title companies don't want to go out of business, and there's enough of them, and there's that, I just heard the other day that somebody stopped Chicago Title or Fidelity from buying somebody else because it would have created a monopoly, that the government said that they couldn't do the transaction.
So let me ask you this. If you had a title report, Mike, and you were selling to me and it was a cash transaction, would we have to buy title insurance? No, we wouldn't.
No, we wouldn't have to, no.
And if I could put that in a digital format and I could prove to you, Mike, that I've owned this, and here's my title report from 4 years ago, and here's my loan report from 4 years ago, and nothing has been recorded against this, would you necessarily have to? Well, your
Shannon,
lender would require you to, right?
Logically, we understand this, right? But here's the issue that I foresee, right? It's a function of cash. And when you start to take the chips away off the table for some participants at the table, now they're going to get upset, right? So how do you?
Well, that's exactly what Jamie Dimon's doing right now, right? Jamie Dimon's jumping up and down and going, Bitcoin's worthless. This Bitcoin's bad. Bitcoin needs to be regulated. Bitcoin needs to be this. Why? Because it's going to take money away from Jamie Dimon. Let's think about this, Mike. Let's take it to another side. And let's say we've already raised our equity. Now we want to raise our debt. And we know that right now we're in a super suppressed debt area, right? But let's just say that I have $10 million in debt I need to raise. And by the time I pay my fees, and by the time I go through all my underwriting, by the time I do all this stuff, I'm going to pay about 3.5% cost on top of my 3% interest. And I only need this for 24 or 48 months. And then I'm going to refinance and I'm going to pay all those costs and fees again. They're just the cost of the game. But what if I created a token where people were actually in first position ownership on the asset at 5%? Now I've completely taken this another step further, and now I don't need a title company at all, because I've provided on digital chain that is distributed worldwide over thousands and thousands of computers in a digital record that the title has not changed, and I've not involved Jamie Dimon at all. I've involved Middle America to become my lender. And now you can see where this really takes us. You can see that this takes us away. It completely decentralizes our need for banks as we know it. And I know this sounds 23rd century, right? Everybody's looking at this going, whoa, 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 this will never happen. In the last 18 months, Mike, $2.2 trillion of cash, fiat cash, has flowed into the digital currency space, and it's become a viable option for buying and selling things. Tesla's recognizing it. All kinds of industries are recognizing it. So there's a ton of things that are happening, and this space is moving very, very quickly.
Yeah, Shannon, and I think you and I, Shannon, both need to be careful when we say, "Oh, this will never happen," because look at the things around us that are happening, that have happened.
Correct.
Just in the last 10 years, how the world has changed, and so this is going to happen. So where's the opportunity lie for a guy like myself or Moose to get involved at a base level, right? I mean, I've missed great opportunities before. You know, there's a national lender right now that had an opportunity to be part of the startup of that, and I said no, it'll never work, right? So you know, my dad had an opportunity to buy a McDonald's franchise for $8,000, you know, 100 years ago, and he said, nah, nobody's going to buy hamburgers like that. Well, look at it, you know. So you know, where's that opportunity lie for simple, you know, for simple guys like me and Carl?
Well, the reality is, guys, the thing that I see is that as syndicators, we find deals, we monetize the deal by bringing the equity together, bringing the debt together, and we find the ability to create cash flow. But at some point, for everybody to harvest and create that, you know, 17%, 19% IRR, we have to sell the transaction. But what if through tokenization, you were able to sell additional tokens? You were able to provide the liquidity where if somebody only wanted to be in your deal for 2 years or somebody wanted to be in your deal for 9 years, you're able to create that where they can transact on their own. They don't have to transact when you want to. They're able to buy, let's say they have $100,000 they want to put in right now, and they want to talk about it later. Let's talk about it in 24 months. In 24 months, things have changed. They want to sell half their asset. Plus, that asset is appreciated. Now they're able to sell out at a higher rate because people are buying that cash stream. There's all these opportunities where, as syndicators, you're creating the ability for everyone to hold this asset infinitely and everyone to hold this asset for a year. It's up to them. So your LPs become shareholders that have a voice with the ability for them to sell their tokens on the platform and trade them back and forth.
It makes the real estate investment much more liquid than it's ever been in the past.
Absolutely.
I think one of the objections that so many passive investors, limited partners have when they come in a syndication is, hey, I'm not liquid. If I need my money, how do I get out? And there's always been that place. So now this almost puts on another layer of opportunity for that liquidity piece for that syndicated investor. And, you know, I have to say this, that our chat this morning is blowing up on this. I've never seen so much conversation on the back channels than we have this morning. And Shannon, I'm going to want you here to make sure that we tell people how they can get a hold of you, because there's an awful lot of questions. And, you know, of course, we've only got a few minutes left on this, and you know, I mean, my mind is racing already today. So you know, I want to.
Well, and this is one of those topics that takes a long time to unpack, and this is why, you know, we still feel like we're early adopters. I mean, when you start thinking about, the fact that you have tenants that are in your buildings that still have savings accounts. What if they could buy tokens in your building, be a part of the ownership structure, receive an 8% cash on cash return or a 7% cash on cash return instead of putting their money in a bank? Now they're in a hard asset. They're in something that is actually secure, that's not going to get closed by the FDIC and sold off to somebody else. And where the heck did your deposit go? Right. So there are so many, like Maureen is saying, there are endless opportunities. And if you go to myverticalequity.com, you can see what we're doing there. And we're starting this, and we're really at the beginning phases of this. And I would profess to you, Mike, and I will say this proudly, I only have scratched the surface of what tokenization and what digital assets and digital currency is going to do to change the world as we know it. And it really will decentralize it. But what it will decentralize is the power. It will decentralize and it will shift the power back to those with the actual cash instead of those that want to control your cash and teach you that an IRA is the way to go and trust your company for your retirement. And the government's going to take care of you and all that crap that we've been fed. It allows you to be back in control of that. Sorry, I didn't mean to swear.
Hey, no, that's good. This is uncensored, raw, unscripted, uncensored radio on Saturday morning. Hey, here's what we say though. My dad growing up used to say, hey, you could go to work and work a 40-hour-a-week job for 40 years and get a $40 watch at the end, or you could go create something for yourself. Here's what I want to know about this, though, is how if I decide to take my deal right now and I'm raising equity on a deal and I want to put it on this platform, do I afford my investors that opportunity today to be able to be liquid, number one, if they're on the platform? Number two, do I have to do double bogey here? Do I have to go with the title company and do blockchain, be on the platform?
Well, so the reality is you have to bring that clean title to us first, right? And I use the analogy of blockchain and title just because as real estate folks, we all understand it. But you're locking that into the smart contract. Now you can, let's say that you're going to raise $2 million. You could say, I want to raise $2 million. I want to do, I got $1 million with people that don't believe in digital securities. They don't believe in the distributed ledger. They want to own paper copies that are sent by DocuSign. And I got those that want to join the 23rd century, right? So you can split your raise. Your liquidity event comes based on what kind of SEC filings you have, because we are a security. We are still regulated. So if you're a 506B or a 506C, there are some exemptions that you can have, and you can do it to do this in a separate way. But the reality is, at the end of the day, that liquidity comes in less than 366 days. So you're not locked in for the duration that is chosen by the syndicator. You can trade at any time. And the other thing, Mike, is there's usually two kinds of investors. There's those that want appreciation and there's those that want cash flow, and they never both fit the deal perfectly. So now you've got your guys that can jump up in on the front side and take that class C to a class B and get out at that point. And then you get your cash flow guys, and all they want is that pure cash flow once that thing's up and running. And so now you've created a market inside. And there's all kinds of other things that we're doing with that to create monthly appraisals and all kinds of stuff where you have an actual mark to market and can actually keep tabs on what your real estate's doing through third party and AI. It's amazing what we're doing in here.
Yeah. Hey, let me just throw this out real quick. Moose, are you out there? Do you have any last questions?
This sounds. No, it sounds very interesting, and some things are coming to my mind. So, Shannon, I definitely want to talk to you offline. It's just, I guess my question is, when is this going to become ubiquitous? When is everybody going to accept this? I mean, what's your estimate on that?
Here's the deal. We're currently working with over $1.5 billion worth of syndicated real estate to bring to the platform. And to say that this is becoming mainstream, the fact that there's been $2.2 trillion in digital securities or cryptocurrency value created in the last 12 months, you tell me, Mose. I mean, and then the other question is, do you want to be behind the curve on this, or do you want to be in front of the curve on this? So to get me to give you my opinion, I believe we're already late to the party as far as need, but I think we're early adopters in the space as far as by design.
Yeah, well, I'm looking at this conversation from three perspectives. How do I buy into the companies that are going to be the ones that are, buy into the Microsofts and the Apples. Number one. Number two is, how can I use this for my own projects and my own investing? And then the third perspective is, how can I, get actually, buy, how can I use it to raise money for my deals, but also how can I use it to earn money myself? So those are the three things that are going through my mind.
And the reality is myverticalequity.com is going to be that place for you to do all three. So we're actually tokenizing the platform next year. So you'll actually be able to buy pieces of the platform. So you'll be able to buy stocks in Microsoft like that. Then we're also going to make it a place where syndicators can bring their deals. We're having retail investors join us on the other side. And then there will also be the ability for you to, through that genealogy, as your list of people come to the platform, you'll be able to continue to monetize your list as they invest in other deals as well. So there's really three prongs there that we'll be able to create in a conversation offline, which I could probably open up some more questions for you, and we can start the continued dialogue that allows you to help understand this as a whole.
Would it be fair to say that you're an exchange? I mean, would it be fair to say that your vertical?
Our design is to be absolutely that, an exchange, a meeting place where this is all done for you. So you as the syndicator show up and bring me your deal. I take care of it all and bring the retail investors. We do the tokenization. We also handle all the second party, third party transaction stuff, the cap table management, the K1s that go out based on how this happens. You throw a distribution in, we take it down the chain so that those that need it get paid it, those that transfer to get paid it. All of those things happen. So we are really trying to be, if Coinbase and CrowdStreet had a baby, that's who we are.
Nice.
All right. Well, listen, we need to start to wind this thing down here this morning. So, first of all, Shannon, this has just been amazing. This is my second conversation with you around this, and I'm more excited today than I was when we scheduled you to be on on the show. So, what I want to do is make sure that, first of all, why don't you just tell everybody how they get a hold of you if they have questions?
Yeah, so you can get a hold of me either at shannonrobenett.com or you can get a hold of me at myverticalequity.com. My Vertical Equity is the platform. The first thing you'll do is hit the KYC and the AML. But if you want to have continued conversations, you go to shannonrobenett.com. You can see over there where in the options there, you can schedule a call with me. We can talk about it further. We can get this conversation started for you as an investor, get it started for you as a syndicator, all those different kinds of options.
Awesome. Thank you. And I just want to thank you for being here. I want all the listeners to know I appreciate them being here this morning, all the questions, everything that's come up in the chat. I'm going to follow up with everybody offline on this and have a conversation there. Also, just so people understand, this morning, for whatever reason, we couldn't go live on Facebook. And I want to apologize to all our regular Facebook listeners. What will happen as soon as this is done being downloaded by Zoom, I will go ahead and upload this on Facebook. Shannon, I'll make sure that I tag you on that, and we'll get it out on Facebook this morning. Also, I will make sure that you get a copy of this. We don't do any editing on this. It's all raw, so people get the real effect of everything. So we'll get that off to you later. Shannon, this has been a great privilege. Appreciate you being on Multifamily Unplugged. And I know after the first of the year, we're going to want to have you on Insider Secrets again, which my other show.
Well, Mike, I want to say thank you to you as well for allowing me to bring this information to your listeners. And I so appreciate what you do to bring education, to bring value to the community, the way that you do, and anything I can do to help continue that, I'd appreciate being a part of it.
Oh, God, Shannon, thank you. I appreciate you. I'm honored. Carl, any last closing thoughts this morning, my friend?
No, just this was a great conversation, a little bit different than our typical, how to find tenants, how to write leases. So thank you, Shannon. Yeah. I'll definitely be in touch with you as well. And really great conversation today. So thanks.
Hey, thanks, Carl, what do you got going this weekend?
Just the typical ballet hockey stuff, with the kids. So, pretty much always the same,
I'm glad you clarified with the kids, Moose. I didn't want to think about you in ballet. That was not somewhere my mind wanted to go.
I was exactly. No.
You should see him in a leotard doing one of those
I didn't need to hear that, Mike.
No.
That's a picture we all need to get out of our mind right
That's
now.
right.
So
That's right.
Yeah, thanks for the visual, Mike. I appreciate that.
Yeah.
you bet. So, hey, listen, you guys, thanks. I'm going to run around a little bit today and just kind of enjoy the fall air, the leaves changing, being outside a little bit. So a little bit of work, and have a great weekend, everybody. And thanks if you are listening online. Thanks for being here. We're here every Saturday morning, 10 o'clock Central Time, Multifamily Unplugged. Tell everybody you know about us, social media, like us, love us, follow us, subscribe to us, and we'll do the same for you. If we can offer any value or any information, don't hesitate to reach out to us. Thanks, and we'll look forward to talking to you soon.